Right, 11 o'clock it is. Okay, so we've got probably we'll have attendees joining over the next 3, 4, 5 minutes as people sort of wander in. So, but we'll kick off and we'll keep to schedule, Julian. So, good morning, one and all. Thank you, everyone, for coming along today to our Zephyr Home Loans and TWM seminar talking about all things legal. And I am absolutely delighted to welcome Julian Sampson. I like to call a friend of mine, but also a fantastic lawyer. Obviously supports us over at Zephyr Home Loans with our limited company business. I've known Julian for quite a few years now and worked with Julian over a couple of lenders. So it's an absolute privilege to have you here. Thank you for joining us, mate.
Welcome, absolutely welcome. Delighted, Andy.
So we've got a heady agenda today, guys. So I'm going to give you a brief. So Julian is senior partner and head of the lending department over at TWM. So years of expertise and knowledge, and we're going to tap into that today. So for those of you that are tuning in, first thing is some housekeeping. I do tend to have intermittent internet issues, and I normally freeze while I'm gurneying. So if that happens, Julian, I'm sure, will just carry the flag and keep running. But we've got a chat function, guys, down on the bottom of your screen. If any of you have got questions on the way through, then please feel free to drop those questions into the chat box, and we'll try and get through as many of those as we can on the way through. We've also had some questions come in before the event, which is great, and we're going to pick those up shortly. As I say, we've got a bit of a heady agenda, so I'm going to talk to you very, very quickly about Zephyr and what we do and what we're all about. And then we're going to hand over to Julian, who's going to be talking about some items such as closed panels, personal guarantees, and independent or ILAs, independent legal advice. We're going to be talking about source of funds, carve-ups and incorporations, board minutes, sole directors' risks, grant to emissions, EPCs, statutory certificates. There's a whole host of things to cover. But as I say, if there's anything that's burning on your agenda that you'd like to get discussed today, I'm sure Julian won't mind being dropped in the deep end and picking that up for us. So without any further ado, so Zephyr Home Loans, we are a dedicated buy-to-let lender. We came to market in 2018, so I think we're getting established now. We work wholly in the buy-to-let space, so we don't do residential funding, we don't do consumer buy-to-let, and we don't do semi-commercial. It's all buy-to-let funding. We work in the specialist space, so we're kind of, if you think about things like HMOs, up to 6 bedrooms, multi-unit freehold blocks, up to 6 houses on or 6 flats on one title, ex-local authority properties, high-rise properties. We'll take landlords up to the age of 95. So there's quite a vast array of things that we'll look at as part of our specialisms. You know, portfolio lending, we've got 100% rental cover in the background, so a really competitive stress test for those of you looking at supporting your portfolio landlords. And actually, portfolio lending, as I'm sure Julian will nod when I say this, but we're seeing a lot more portfolio lending, people looking to incorporate as part of tax planning advice that they're taking since all the tax changes hit. So, you know, that's something that we can assist you with. So there's a lot of stuff that we do in the background that we'd love to chat to you about. We've got a full sales team, so we've got 3 regional sales managers, one in the north, myself in North London, East Anglia in the Midlands, and we've got Mark down in the south, southwest, southeast and South London. And we've also got a fantastic team of telephone BDMs. So all of our contact details, guys, are on our website. If you've got a case, you need some help, reach out to us. We've got a great line of communication. We've also got a really good working relationship with our valuation partners over at Connells. So if we've got a property that we're not too sure about, we can lean on Connells to get us some sort of pre-application advice, which is really, really useful to help you guys place your cases. And we're always keen to have those discussions. So like I say, lots of things that we do. I'm not going to get too much into our criteria today because this is about legal, but just to say that if you've got buy-to-let inquiries and you want to talk to us, then get on the blower and give us a shout. So right at the end of this, we're also going to have a draw. So hang around till the end because we're going to have a draw for all the people that have registered today. And I think it's a 50 quid Amazon voucher, so definitely worth sticking around for. We didn't need a bribe to keep them on the call, Julian, but you know, we just thought we would plan ahead.
You and I both know that's not the case, Andy. You definitely need a bribe.
So on that note, so like I say, really a quick background about why we're doing this webinar then. So Obviously, we are seeing as a lender a massive increase in SPV applications over the last few years. You know, when I think to what we were doing when we launched to what we're doing now, it's a huge increase, up to, I think, over 70% of our business now comes through SPVs. And I know that's not the thrust of today, but a lot of the stuff you will talk about, of course, Julian, will be around the SPV piece. So I think it's interesting that people are tuning in and want to learn about that, and it is a complex area of the market. So without any further ado, let's hand over to you, and I'll let you carry the flag. And as the questions come in, there are. Oh, by the way, yes, just quickly, Julian. Sorry, before I do that, there have been a number of questions. 3 of the questions regarding legal, Julian is going to pick up during his presentation, so I'm not going to cover those. And the 3 questions that we've had, the other 3 questions, you're going to actually answer specifically. We've had some lending questions. Sorry, guys, just looking to the left, so I cover them off. I'm just going to rattle through those quickly. So, do you offer loans for service purposes such as Airbnb? No. Nice, quick. Oh, we don't lend on Airbnbs. Buy-to-lets with ASTs. Do I have to be a regulated mortgage broker to access limited company buy-to-let? I am regulated by the FCA for consumer credit. All of our brokers need to be regulated by the FCA, whether they are DA or they are AR. If they're ARs, they're going to obviously come through their network. If they're DAs, they can access us via a mortgage club. Why do lenders charge higher rates for limited company buy-to-let lending? I don't know, because we don't. But historically, if you go back, you know, if I go back to when I was broking 10, 12, 15 years ago, you know, buy-to-let lending was a lot less common. A lot of lenders priced accordingly, and I think that's whittled down over the years. Less and less lenders charge a premium for limited company. There are still a few that do it, but we're not one of those lenders. Our pricing is equalised across individuals and limited company. Why are properties being downvalued so much? Well, that's a good question. I have to say, from Zephyr's perspective, we're not seeing a rise in down valuations. I mean, typically the market suggests that 20% of down valuations have, 20% of valuations have a down valuation either on rental or property value. We're not seeing an increase in that specifically. I do think we're in difficult times now. Obviously, you will all be aware that mortgage rates are starting to increase quite dramatically. Currently, cost of funding is going through the roof, which is affecting lenders globally in the UK. We're seeing high street lenders start to put their pricing up, and I think that will naturally potentially drive a downturn in valuations. Certainly in my area, I live in Norfolk, we've seen house prices rising exponentially, and valuers, part of a valuer's job, of course, is to look at the future and protect the lender that they're valuing for. So, you know, they're maybe slightly more sensible when approaching evaluations than just trying to get every buck out of the property, which clients, of course, will want to do. So I think that's just, you know, let's keep an eye on that over the coming months and see how that plays out. Why are IFAs regulated by the FCA? We like to join you. Sorry, we are IFAs and we're regulated by the FCA and we'd like to join you. Absolutely fine. If you're regulated to do mortgage business, then we can work with you. Give us a call and we'll talk about that. And the last one for us, communications mispayments. So with communications or utilities mispayments, guys, we can take a view as long as it's not gone into default. What you will need to do is just run a DIP, and then what we can do is to have the underwriter have a look at it. And there may be some questions off the back of that, but it's not a no. So that's all my questions, Julian. Now it's definitely over to you. So I'll hand you the flag, my friend.
Thanks, Andy. Thank you, everyone, for joining us. As Andy said, this is going to be something of a whistle-stop tour, encompassing hopefully answering a couple of questions that were received overnight, but also some key areas that I know cause us within the law firm, within TWM, concerns about we want to address with borrowers and as a consequence with brokers, so that we can make the journey to completion that little bit smoother for all concerned. So loosely, I've called this sort of pitch a sort of law of unintended consequences, because we all, believe it or not, have the same desire for the good outcome for the client, the borrower, yourself as a broker, the solicitors, the valuers, the lenders. We all would like to get everything seamless and across the line. So it's not that we're all here trying to create hurdles. These hurdles exist, and our role as professional advisors to the borrower and or the lender are quite often to try and explain why these certain hurdles exist, just as you would explain the difference between lenders and their criteria, and to get these accommodators so that the lenders get comfortable and can get the money out the door. So There are a lot of unintended consequences that have arisen as a result of the buy-to-let market, which, as Andy said, has grown exponentially, but also, as you'll remember, didn't actually exist as a concept sort of 20 years ago. But also the rise in the limited company market, which again is something that has usually been something that portfolio landlords or large institutions have been very comfortable with. But as we move into the more both accidental landlords and part-time landlord sphere, has arisen and again accommodated by lenders, and as Andy said, Zephyr, not differentiating in rates between an individual and limited company. So the unintended consequence is that people are walking into limited company lending both as advisors and as actual sort of counterparties, as borrowers, without the experience of running a company as an organization beyond going online, arranging a 24-hour company incorporation and using that as almost a function of running their business, rather than understanding the fact that what they're actually establishing is a new legal entity. So there are, as I say, unintended consequences flow as a result. One of the things that I wanted to touch on first, which flows from that, is why lenders operate closed panels in the limited company space. Not everybody operates a restricted closed panel, but typically even the ones that would have the broadest panels still restrict it to something like between 10 and 20, and not often beyond. There is a reasonably a good response to this, and that is simply that conveyancing for when we're acquiring a house, whether it's Mr. and Mrs. Smith or whether it's the Smith Enterprises Limited, the actual conveyancing elements don't differ, particularly whether you're a limited company or whether you're buying as an individual. The elements that surround that, however, in obtaining the mortgage do differ substantially. So what we find when we're acting on separate representation basis, which is where we act for the lender only and the borrower has their own solicitors, is that there is a significant knowledge gap with the traditional conveyancer, be that high street, be it a large volume conveyancing practice. But there is a significant knowledge gap, not just in relation to technicalities, because we can't expect a conveyancer necessarily to be all over corporate law, but also in relation to the logistics. And one of the reasons why closed panels do work, no matter how frustrating it can at times be, is that the closed panel lawyers tend to understand the movement of documents back and forward, what they look like, how they're filled in, very simple stuff. Not dissimilar, I guess, to where you might have a network or a club that has an arrangement with Zephyr to put cases in. You might have a broker that's coming in for the first time into Zephyr and just not understand how that should be packaged or presented properly. And you're going back and forward and trying to get documents in the right place. That's very much the same as us who work on a closed panel with specialist lenders, trying to get a borrower's solicitors to understand how to, where, for example, in which of the several box options a client has to sign a mortgage deed. Pretty simple stuff like that. In fact, we've got some borrower solicitors who can't quite get their head around, scarily, why a mortgage deed is even required. So it's important that there are solicitors who have an understanding of the lender as well as the mechanics of limited company lending, so that not only we can logistically move the documentation around, but also we can cover off the offer conditions. So again, if you introduce plenty of business to Zephyr, you're going to understand where Zephyr's price points and hurt points are when you submit a case in. So there's no way you're going to submit a case into Zephyr where you know it won't wash. So we've just heard about Airbnbs with Andy. Similarly, from our perspective, if we understand Zephyr's offer conditions backwards, in some respects we may have contributed to how they're drafted, or we may contribute to how Zephyr may interpret some of the things that come across their desk. So what that means from our perspective, we can then go to the borrower's solicitors and try to explain how these offer conditions can be addressed. There's very little point trying to argue the toss about an offer condition. It's there for a reason. It either needs to be dealt with or it needs to be waived. It can't be fudged. And the reason behind not being able to fudge an offer condition is because those offer conditions, as you guys will know, fit into lending policies. Lending policies have been agreed well in advance with funders. and go all the way much further beyond the underwriter's desk. So when you have a closed panel, the solicitors acting for the lender should be aware of how those offer conditions can be worked. Why is that important? Well, frustrating though it may be as you try and teeter towards dealing with the offer condition, it's much less frustrating than, for example, sending in a funding request with your certificate of title to be told you can't have funds on X day because a fairly substantial offer condition can't be addressed. So let us say somehow that an offer has been made, for example, on an Airbnb. We know it's not going to happen, but let's, for the sake of argument, say it does. The offer condition exists that Zephyr will not lend an Airbnb. The solicitor is aware suddenly it's an Airbnb, but doesn't really understand how that fits into the release of funds. They exchange contracts. The purchase is due to happen on X date. Funnily enough, the funds don't turn up. The borrower is in breach of contract and all the problems that arise from that. That is not going to happen when you have a solicitors involved acting for the lender that are experienced in what they're trying to do. A solicitor that would otherwise work with a specialist lender once a year, and there are plenty of those that is the case, will just not have the logistical and technical experience to take that on. It's not a criticism, it's just where we end up specializing. So that is why closed panels exist. It's simply because the best and safest way to get a borrower across the line is to use a solicitor that is comfortable with working with that particular lender and the mechanics of working particularly with limited company lending.
Quick question.
Sorry, Andy, yeah, of course.
No. So it's interesting this, because I think we're seeing this in the mortgage market now, aren't we? Where if I go back to when I was broking, you had to be kind of a jack of all trades, but because of the complexity of the market now, we're seeing brokers get very, very specialist in maybe dealing with portfolio landlords, or getting specialist in semi-commercial type deals, or maybe even just specializing in mainstream residential. So we're sort of seeing this diversification of all of us, actually, aren't we? Lenders are diversifying their specialisms, so I think it's a good point. A question I've got though on this topic, so on frontline sales, doing the job that I do, a daily challenge for us is to mediate between you, the broker, the client, and the client's nominated third-party solicitor, which can be a challenge because as a lender, it's not our job to control the conveyancing process, it's to get the client to offer. We've done that job, but there seems to be this kind of understanding that we're still there trying to facilitate, trying to get all of these parties to talk to each other. And it's one of the things that I see can be quite a heady challenge. Do you see this on your side of the fence, and do you have any ideas on the best way to deal with those kind of problems?
I think Andy, I mean, it is trouble. So we have solicitors that we dread working with, that we know are going to push us to argue around a particular offer condition, or who in many instances simply won't understand the questions we're asking. So a very simple point, which is quite relevant at the moment, is fire safety. So obviously we all know about the principles of fire safety in relation to cladding. The people attending here will probably know there was a new Fire Safety Act which came in, I can't do my maths, but 7-8 days ago, and that will have an impact on all fire risk assessments. Now, the headline is cladding, but fire safety as an issue has been something that we've been raising in relation to the more complex properties, so HMOs, multi-units, for some time. Trying to have a third-party solicitor argue with you that fire safety is not an issue sometimes is the genuine head-butting wall moment, because a third-party solicitor or an advisor says something, it doesn't apply, doesn't mean that's the case. You would hope that they would take a genuine legal position and say it doesn't apply for reasons A, B, C, but quite often it will be when something blatantly does apply, it will be the point that they will try and shout loud enough to try and get us to ignore it. And that's when you tend to get certain frictions, because we are experienced with this type of property. We know a fire risk assessment is required. We know sight of a fire risk assessment is important. It's not just a case of us saying, yeah, it exists and we don't need to see it, it'll be fine. But by the same token, if we have a receptive solicitor, we can help that third-party solicitor, that borrower solicitor, deal with a fire risk assessment that doesn't exist. So let's say, you know, the borrower is in a small HMO. It's not a mandatory licensing area. We and the valuer specifically has pointed out that a fire risk assessment is important. There are areas within the legislation that allow us to almost do a short form fire risk assessment, and we can direct the third party solicitor to the appropriate checklist on the government website that enables them to perform their function as the responsible person under the legislation, but also to get to a safer place in relation to property, but get to completion. So it's very little point arguing against us when the legislation is rather black and white. Instead, it's great when we do get a solicitor that's receptive to what we're suggesting. And when we raise queries with third-party solicitors, Andy, we're really, really keen to ensure that where there are these challenges, we will provide links to external documentation, or we'll even draft documentation ourselves to get the borrower across the line. So another big issue, and I don't want to dwell on this because this is a massive can of worms, but is HMOs and Article 4 directions. So where you have permitted development is restricted for the use of a small HMO, we have to try and establish, because lenders will specifically condition it, again, because the valuers are doing so and are telling them to, that a certificate of established use is in place for the HMO. The borrower will turn around and say, oh my good God, it's been in existence for 20 years. Why on earth are you going down this road? Trust me, with my reasonable hat on, I agree with the borrower all day long on this. But the point is, me agreeing with them is not going to get that offer condition dealt with. So in those instances, what we do, for example, is we will draft our own statutory declaration for the borrower's solicitor to use. They can actually take, once completion's happened and we've got through the door, they can actually use that to regularise the situation and send it into the planning authority and get the certificate that they probably ought to have got before completion. We don't charge extra for that, but it is an example of where we have used our experience to develop a process or a series of documents that the borrower who's not our client, can go on and use in the future. It gets us across the line. It hopefully gets a happy borrower and a happy solicitor. I'm sure it produces lots of eye rolls at the time as another document that we're asking people to complete. But there is a long-term reason why we're doing it and trying to achieve that. And that's the balance that we will always try and get to. We are generally trying to progress matters, and the problem comes is when you don't get someone so receptive.
Yeah, okay, that's good. I mean, I always hark back to when I bought my home. My file was doctored by the conveyancing solicitor that acted for us. We were landlocked at the front of our property, and there was a big note on the file saying, do not tell the client. Now, this didn't come to light until I applied for planning consent to develop the back of my property, found out that I was landlocked, got a copy of that file, and then found this highlight on there. So, you know, you always talk to people about the quality of good conveyancing. So, is there anything, I want to wrap this point up really quickly because I'm aware of time. Is there anything the broker can do to facilitate a better relationship between the two conveyancing parties, do you think?
So I'm really conscious that one of the questions we had overnight was from someone I know about essentially transparency. And you know, there are certainly portals that we operate and that other conveyancers operate that will give some basic milestone transparency. I think one of the problems that we see in the specialist lending market is that transparency only typically goes so far when you've got structured milestones. So it is quite often not the case, for example, that it's important that everyone knows that a mortgage deed has turned up or that we have a copy of the land registry title. What tends to be an issue, let's say, as we talked about it, is has the fire risk assessment been addressed, or has there been an asbestos management plan in place? There is no case management or portal available in the market that will actually allow us to freestyle those sorts of outstanding points. So quite often, having a portal, as I say, we have one that exists. It's great if you just want to log in once a week and check general progress. But where you as a broker want to get into the nitty-gritty of why something is either stalled or what can be done to help progress something, it's often that sort of down and dirty detail that you can't get from a simple online system, but actually you can get from seeing the underlying queries that are raised or actually looking at the offer conditions. So I'm pretty sure it doesn't apply to anyone who's taken the time to log in here today, but the number of brokers that we see and solicitors acting for borrowers who actually don't look at the offer conditions. So the offer comes out, the next question we get is, when can we draw down funds? And when we try and explain that an offer is conditional in relation to the legal conditions, we get, again, several eye rolls coming our way. So from my perspective, the best thing that a broker can do, and I'll talk on a couple of topics about other specific areas they can assist, is to just be aware of those standard offer conditions that come out that can be hit nice and early with the borrower, even pre-offer stage. So moving on quite quickly, Andy, I know personal guarantees and ILA is one of those points. So where we have separate representation in place, that's quite handy for PGs and ILA because the borrower has their own solicitor. They can, within that same law firm, use another partner, for example, providing they can accept that there's a Chinese wall in place to advise the borrower. So they can incorporate all the guarantor. So they can incorporate that independent legal advice within the same unit without it impacting on the lender's position requirement for independence from the lender. Independent legal advice, PGs are important and apply across the board in relation to limited company lending. All comes back to something I alluded to earlier, which is that a limited company is a separate legal entity. And as a separate legal entity, they are separate from the guarantors. No matter how much people think they are the company and the company is them, they are considered to be separate. And so we've got a very old case from the early 1900s, Salomon and Salomon, to thank for this. But essentially, a lender, when it has a contract with the limited company, a limited company has a limited asset base within it. So it is only as good as the assets it holds and its share capital. Once it goes beyond that, there is nowhere for the lender to go to recover. So that's why it brings in a guarantor, because a private individual is considered to be within reason a bottomless pit. So the limited company lending has, if you like, given rise to an established piece of law that's been around for over 120 years now, which is essentially that a limited company and the individual are independent and separate legal entities and must be addressed as such. So ILA, very important. As a consequence, it's something that our regulators do look to for us to push on, simply because we have underlying issues in relation to conflict of interest. And it is the case that certainly the law considers that a guarantor, being independent from the limited company, has different necessary residual outcomes. Why, if I could get away with it, would I, as a guarantor, put my essentially house up to protect my buy-to-let investment portfolio? I probably wouldn't if I could get away with it, and that therefore implies that there's a potential conflict, and that's why that independent legal advice becomes really, really necessary.
Yeah, it's good point. I mean, one of the questions we get asked, because I know some lenders will take an ILA and a PG across the company, and there are other lenders such as Zephyr that want a PG with an ILA on every individual property, and I'll address that from our point of view. Firstly, I mean, I know ILA has a determined amount of time that you could realistically suggest that it applies to lending, but from our point of view, we want to make sure that the client is, fully understands the commitment they're undertaking on each transaction that they do. And we all know that over a period of time, clients can be in a position where they need additional levels of protection. We talk about vulnerability in the arena that we work. And we want to make sure that each individual transaction has been addressed correctly and properly. And there is the pushback from brokers is that, is the cost of this. But, if you look at running any business, whether it's a lender, a legal practice, or a buy-to-let business, there is cost to running that business. And I think part of the duty of the brokers that work with their clients is to explain that, you know, as a consequence of taking out mortgage lending, there are going to be additional costs. And where you know, we do see some lenders take a holistic view, there are lots of lenders, and probably more so, that don't, and that needs to be considered as part of the whole sort of planning and cost process. Do you have any other thoughts on that from an individual sort of guarantee versus,
I think you're absolutely right. I mean, there is a cost to doing business as a limited company. I mean, I used to do seminars where we used to talk about limited company and lending involves cost, but it also involves forms and all these sorts of weird and wonderful things that you didn't otherwise have. And they actually all have fairly fundamental issues with them. And I know we'll touch on board minutes in a minute, but you know, if I don't file my annual return every year, I run the risk of the company assets disappearing into the Crown. It's a bit dramatic, but that's ultimately where it might end up going. So for the sake of filling a form in, there's something of a catastrophic effect. All these little things, these little chips into your processes, into your mind think, into your cost implications, because most people will hire an accountant to file these same returns as well as they do the tax returns. They are part of operating a business, and if you choose to go into the limited company space, you're just going to have to accept that is part of the cost of business, because the positive side of that is that there are opportunities to write off and write down certain things against certain liabilities against your assets for various reliefs. So there are swings and roundabouts, but it is important to pursue. I mean, it's when you talked about vulnerability, Andy, and one of the questions I know we had coming in was about LPAs, sort of lasting powers of attorney. I've got sort of very quick comments on that. Of course, it's important to have an LPA, or to consider the two strands of LPAs you can have, one in relation to personal care and one in relation to finance and business. So it's important, just as important, to look at your wills. One of the things I would say, and again, this then knocks onto the foreign nationals question, which I know we've also received, is that years and years ago, before the FCA was the FCA and it was the FSA, there was a missive that went around that talked about the fact that they did not like borrowers using attorneys to execute security documents, so mortgage deeds. And we take that same view. So whilst that isn't a current thematic point from the FCA at the moment, it is certainly a big risk point that we will not accept a mortgage deed, for example, executed by an attorney on behalf of the borrower. It just adds so many different layers of concern for us and red flags. And so with the foreign nationals point, it would be valuable if we didn't take that view, unfortunately, but it is something that is of particular concern. Okay, good.
Just a quick question. One last question. I find all this stuff interesting, as you know, and I'm a bit of an egghead when it comes to this, but have you come across, and this is just a question that's come into my head, we talk about taking individual PGs and ILA on each property that's done in turn within a limited company. Have you come across, or are there any famous cases, there may not be, where someone's taken, or a lender's taken, a holistic ILA and PG across a limited company, and then for some reason, as clients have been adding properties in, that ILA has not supported future properties and there's been a problem?
Yeah, I mean, look, there are two sides to this. The first is that there was one particular lender that uses a particular servicing company, and all their PGs were aligned to a particular mortgage offer, and they hadn't taken this into account when they were looking at portfolio lending. And so what ended up happening was that they found that they could only rely on the first guarantee, because it was the way it was originally drafted was specific to the offer and not across the entire portfolio. So they took a risk decision that actually wasn't supported by the documentation that they'd had set up when they launched. And that has created ongoing problems for them in relation to their book, but also in relation to how they look to cross-collateralize with other loans within the portfolio. And they're being more aggressive on that now than they might otherwise have been if their documentation was in good shape. So it's actually, and there's another lender we don't act for, but who, by the same token, has a debenture in place that they think says something and actually says something entirely different. And I think 18 months down the line, and it's suddenly come a cropper. So there is actually very good practical reasons why you would silo a PG, an ILA with one particular mortgage, And unfortunately, yes, you'd need to do it again on another mortgage, and that gives the lender also more flexibility in relation to securitization and where they place each mortgage in which bucket, so that they can be divisible, rather than feeling they have to be part of a cross collateralization exercise. So that there is some value in it, and I think, talking as an advising solicitor, if I'm the borrower and I have got several PGs across several properties, what I would probably want to do is get on the phone to my ILA solicitor and say, you've got 5 coming across, can you do me a deal? Rather than say it's 5 times 150 or whatever it may be. People are very quick to ask me for a deal on the conveyancing, so they should be similarly quick to ask someone for a deal on ILA, and I'm sure they'll get it.
Brilliant. All right, well, I'm glad I asked that question. So that's a really interesting answer, and hopefully people listening in who have probably thought this themselves, that probably that's good context. Okay, moving swiftly on. Very aware of time, Julian. I could go on like this for an hour and a half, mate. So no,
that's fine.
Minutes. Just quickly on minutes, and then moving into sole director risk.
Yeah, look, I mean, we talked about what brokers can do to assist. I mean, we haven't touched on it, but one of the things is source of funds. Being very aware of what you're putting down in your application. So if you're saying that someone is contributing a director loan as the extra capital in the business, make sure that that's what the borrower understands it to be. The number of times where we have said, we have raised a concern with a third party solicitor to say, look, this is a director's loan, can we document it? Can we help you document it? Can we provide a director's loan agreement? For them to be told, well, then it's just an injection of share capital. That actually completely changes the context of the underwriting. It'll be the same outcome. We all know it'll be fine in the end, but it does suddenly add another week and a half onto it while it goes back to the underwriter, and we've then got to provide different sorts of documentation to show for share capital injection. So please do show that, and that's particularly important with portfolio and corporations, because the cash and the cash equivalent, which is coming from the existing equity, needs to be one or t'other. We need to show what the balance of that consideration is. And typically, if we're going to talk about share capital conversion, then we need to make sure that the underwriter is aware of that as well. Board minutes follow on from that, because the board minutes are as much about documenting what is happening as it is about just getting something to be signed. Board minutes, we have a standard form that we use that we can share with third-party solicitors, but essentially board minutes, whilst ideally have some standard boilerplate clauses, all we're trying to do is they are a minute of what has happened. They are not necessarily, although they provide us some structure, they're not supposed to be a precursor of what is happening. They're supposed to be a minute of what has happened. So the fact that a borrower's board minutes might sort of be a scrap of paper with half a page written on it, as long as the substance is there, that gets us through the door. But again, as a broker, I think try and help your borrower understand, and this is particularly the point where you have small companies, that just because there is a sole director and a sole shareholder doesn't mean, no matter how insane it sounds, and I know it sounds insane, that they can't have a meeting with themselves. It's a problem that's thrown back from the last 120 years, but for the sake of arguing the toss with me, please just get the borrower to do a board minute, and we can provide that. It's simpler than having me rant on about why it's legally and technically important. And bear in mind that the Companies Act does say that if you are a company and you don't minute your management decisions, it's a criminal offence. And I mean criminal offence in the same way as Partygate's a criminal offence, insofar as there is a financial sanction as opposed to being slung in jail. But it's important. So please tell your borrower to expect them. We will produce them if we have to, if they don't have them or their accountant doesn't know it. And let's bear in mind that accountants are like solicitors. There are some great ones and some shocking ones who don't know what a board minute looks like. So we will provide it if we need to. Okay. I just, again, from your side, conscious of time too, Andy, so sole director risks, and we touched on sole directors and board minutes a second ago. It's important they're done. The reason, and there's a case that's just been decided in April, which again I'm warning brokers about, because we've had a number of conversations with our lenders at the moment that we're trying to understand the impact of this. But essentially, where the board minute is undertaken by a sole director, there is now this case that says that board minute or that management decision was taken unlawfully, because in the company's constitution, so we talked very at the start about when you set up a company, you go online, hit a button, and you get given this company constitution. There is a conflict in that company constitution standard document between where you have a sole director, between the fact that you can have a sole director, which is in the standard template, and further down there is a section on what's called quorum. In other words, the number of people you need to have at a board meeting to make that management decision effective. Bizarrely, given these are model articles from sort of the 80s, and so you'd think this had been sorted a long time ago, whilst you can have a sole director, there is a minimum quorum that states it has to be more than one director. So there is now this big panic going around that where you have a sole director, you are potentially unlawfully going into, let's say, a mortgage transaction without constitutionally being able to do so. So there is a way for us to tackle this, and we do that by amending the Articles of Association, the company constitution. It's a simple document that sits alongside the board minutes that can then regularise this and make it right. We do something very similar with development lenders that do share charges, and again, the standard articles prevent something restricting shares. So be conscious that even though you might not be dealing with TWM, lenders are aware of this particular legal hurdle that's just arisen after this court case, and they will be mandating certain things with their closed panel, and this will be a headache for everybody who hasn't got corporate experience, which goes back to my first point about solicitors with experience. So I'm not saying whether this is going to be an absolute disaster or not, but it is starting to filter down through lawyers and conversations about how we address this.
It's really interesting that you bring that up, Julian, because we had a case probably about 9 weeks ago, where our panel solicitor actually picked up on this new legislative change that affected one of our borrowers. The borrower wasn't aware, their acting attorney or conveyancer wasn't aware, the broker certainly wasn't aware, and it got picked up and it came back into our underwriting, and it had to go through the process of being re-looked at internally. So it did add about 10 to 15 days to the completion of the case. So yeah, brilliant that you brought that up, and it is, and quite possibly if we hadn't have had an internal panel firm working on this, it may have got completely missed. So just kind of
and look, and I think and this is the frustration with us all. We all know that even though it got missed, I guess this is no dissimilar from if you're going down the street and speeding your car. If you're not caught by it, it's not an issue. Or there's not a sort of a dangerous accident or whatever it is. It's not a problem at the time. So if somebody hasn't changed this constitution or haven't had this board minute, unless it's challenged, then we'll all go away. Your mortgage will be redeemed in 5 years' time, and it will never be an issue. And that forms our experience. So the number of times we have third-party solicitors, particularly the volume conveyancers, say to us, "Well, we remortgaged this 5 years ago, and we didn't ask this question." It doesn't mean it doesn't become an issue. And the reason this particular one became an issue was because there was a brother involved who essentially was then able to challenge the position in relation to this management decision and unwind the whole thing. And of course, unwinding anything for a lender is very dangerous because it leaves you in a wholly unsecured position, having your money out the door but never coming back. Okay.
Yeah. Okay. I'm really conscious. We've got 3 minutes left, Julian. So, ground two emissions, EPC, statutory certificates. You've got 2 minutes. Go.
Let's hit ground two emissions. Again, brokers, if you can get together your clients' tenancy agreements and all the statutory certificates that, or at least tell your borrower to get them together, statutory certificates that we want you to see. We've talked about fire risk assessments, but electrical certificates, gas safety certificates, EPCs. Obviously, we can all get online, but the ASTs must have, no matter how awful they look in relation to drafting, we will get them through if they've got a particular clause that enables a lender to take possession. Bear in mind that we can then, if it doesn't, it's not wholly detrimental to the case. We have a way of inserting a notice, and we will provide this notice for them to serve on the tenant after completion. You'll all be aware that Section 21 is being limited in relation to possession. Not such an impact on lenders, but obviously an impact on your clients. And with EPCs, bear in mind that there is currently progressing through, the feeling is that from 2025, everyone is going to be looking for rented properties to have an EPC rating of C or above. At the moment, it is obviously a lot more generous, so we're talking A to E, but C and above from 2025. So that is going to make a massive financial impact on the clients. There is a get out, which is obviously if it is financially prejudicial to make that change, and that is how people often get away with not having EPCs on listed buildings, for example. So I hope that covers off those angles in short measure for you, Andy.
Yeah, it does. Thank you. That's absolutely brilliant. And I wish we put it in for our Julian, because I could carry on talking about this stuff. So it's really, really good. Listen, mate, we are rounding up the end of it now. So a massive thank you from me, and a massive thank you from the Zephyr team for supporting us today. I personally find this stuff very interesting. I hope our attendees today have found it equally so. But for those that just stuck around for the draw, it's now time to get our lovely Angela to come online with our draw. So we've got a draw for an Amazon voucher. So can I call you to the table, please, Angela? Here we are. So what we've done is we've added all our attendees' names to the draw spin. So Angela, if I can ask you to spin. Very exciting, Julian. Very exciting technology. So Musa Hussein, congratulations. You are our winner today. Thank you for attending, and congratulations for winning. We will be in contact shortly via email to you to arrange to send you your voucher. So that hopefully enjoy that on us. And again, just listen, a really big thank you to everyone for coming on today, and Julian for I think we need to do another session with other topics, mate. Keep covering this stuff off. But,
happy to, Andy.
Yeah, brilliant. Thank you very much. So, guys, if you've got any follow-up questions, if you want to email them to me, my email address is andy.rowe@zephyrhomeloans.co.uk. All of our BDMs and regional sales managers' addresses on there. If you've got any questions for Julian, you can send them over separately, and we'll get those in. But thank you for joining today, and a massive thanks, Julian. Hopefully, see you again very soon.
Great stuff. Thank you, everyone.